Profits at Ansell, specialist in gloves and condoms, are down, but its new chief executive says a recently completed company restructure and a new aggressive growth strategy should help turn things around and lift future profits. Emily Stewart reports.
Ansell Chief Executive Marcus Nicolin has been in the top job for less than 6 months. So far, he appears to be relishing the challenge.
The board essentially asked me to do a couple of things. One was don't drop the ball, number two, grow. Well, we're not dropping the ball, and I think you've seen that.
The company has posted a full-year net profit of just over $119 million, down more than 1.5% on last year. But Ansell and analysts prefer to rely on the company's operating currency, the US dollar, which means a profit of $106 million, up 18%. The group says the good results have largely been driven by a recent restructure of the business, as well as efforts to limit the group's exposure to latex prices.
They spent more than $10 million on restructuring this particular year, and they're saying that in 2011 that'll add 9 cents per share in US dollar terms to their earnings next year.
New products and an expanded client base in the industrial and medical divisions have driven earnings in both sectors up around 14%. That's been enough to compensate for the poor-performing consumer healthcare sector, which has faced a number of challenges.
Well, obviously there was an underperforming Polish business which really weighed heavily on the company. We also saw problems with regards to its manufacturing plants across the world, which also caused a number of issues.
A key product in the company's growth strategy is a new surgical glove which kills 99% of most common bacteria and could be used in hospitals around the world. Ansell wants to become a global market leader in each of its divisions and is likely to sell off underperforming brands.
Right now we're number 3, number 4, number 5 in lots of different segments. And we're going to make a call on whether we're going to stay involved or not. If we stay involved, a clear program to become number 1.
And after launching its medical gloves in China this year, it hopes to increase its presence in emerging markets such as South America and the Middle East.
That's where the jobs are going, and we are de facto in the business of providing protection to workers, whether they are in the medical space or industrial space. So if that's where the workers go, then we need to be there. So we are going to be doing more to accelerate our penetration in those markets.
Magnus Nicholas expects slow but relatively steady progress for Ansell in the year ahead. But analyst Andrew Goodsell believes 2011 will be a difficult year for the group as it battles against the high latex price and unfavourable currency movements.